Hello again, and welcome to our look at the Tuesday, January 6th trading session. In front of you, I have the economic calendar, and as you can see, really, most of the attention is going to be paid to the United States. ISM, non-manufacturing PMI, being the largest announcement that will affect the stock markets and the U.S. dollar. Really, at this point in time, that is the one thing we are paying attention to. We believe this could perhaps cause a little bit of support in the stock markets, but that being said, let's take a look at the charts. Okay, the first thing we need to take a look at is this gap down in the euro dollar, and we did gap below the 120. The biggest problem that I specifically have with this particular area is that I think a lot of people are going to get hurt by this. Let's take a look at the monthly chart, and you'll see what I mean. This is an area that is massive support. If we are going to see a bounce in the euro, it's going to be here. It's going to be very difficult to play off the binary options, though. But the reason I'm bringing this chart to your attention is because I feel a lot of you could get whipsawed in this area, and I figure that maybe it takes a little bit of the potential danger out of the trading scenario. We are already starting to form a hammer. If we break back above 120, it is very possible this could be the bottom of the downtrend. Truthfully, staying away from this pair is probably paramount at the moment. Over in the S&P 500, you can see we continue to fall, but we're getting pretty close to a relatively significant support area right here at 2020. So looking for a supportive candle in order to start buying. We think that it could very easily happen, but we're going to wait to see. We would buy calls at that point. We're not interested in buying puts just simply because somewhere between 2020 and 2000, we would anticipate seeing pretty significant support. So really at this point in time, it's best to sit and wait to see if we get that support in order to start going long via calls. And finally, you can see that Germany fell pretty hard during the session, breaking through 9,500. At this point in time, if you're not short already, you've got no business buying puts. Somewhere in this general vicinity here, around 94, we would anticipate to see some type of support. We buy calls there on supported candles. In the meantime, the thing you have to keep in your mind, this time of year, a lot of things are just getting started up, so you get a lot of funkiness in the market still. Liquidity probably isn't quite up to par yet, so typically what happens is you get a little bit of a move in the beginning of the year, and then it gets reversed once real money comes into play. So having said that, we believe that there will be a call buying opportunity just a little bit below, and that's how we're going to trade this market. We're going to be patient. It's a little difficult the first couple of serious trading days of the year. You let the big players decide what they want to do, and you follow them. Right now, we suspect that they are going to start going long around 9,400.